Assalamualaikum and a very good day. Welcome back to my channel. This is the video that will discuss question 1 June 2019 part D. Okay, before this there were two videos that discussed the same question but in the earlier parts, so please do watch those two videos that I have published earlier. Right. So question 1, June 2019, D2 is also on PPE, and this is under the cost code FAR320 Financial Accounting 5 that is offered at UITM. Okay, let us look at the information that were given here. Okay, let's read the question before we start. Suzuki Berhad owns self-constructed plan. So they have this self-constructed plan, and the self-constructed plan is actually having an initial cost of 22 million. Okay, it was a self-constructed plan, initial cost 22 million. And once the construction has been completed, they started manufacturing in the plant on 1st of January. So this is the date that it has been completed, and which is on 1st of January 2003. Right. And on 1st of January 2003, so the cost was 22 million on that date. And on 1st of January 2018, the fair value of that plant now is revalued at 23.905 million. You are informed that they adopt revaluation model, so fair value will be taken into consideration because they adopt the revaluation model. Unless they do not adopt, you will just ignore the fair value. It will be depreciated over 50 years on a monthly basis, meaning that you still depreciate the asset according to month of ownership. The account is closed, or the closing is every 31st December. This is what you are required to do. You are asked to calculate the balance of the following account as at 31st of December. Number 1 is plan account. So plan account here, initially it might be at cost, right? But as you decided to use revaluation model, the account will have to also reflect the revalued amount. So you are asked to do for 31st of December, where the revaluation took place on 1st of January. So there are no more revaluation after that. So on 31st of December, the plan account will have to be 23.905. So it's a direct question on plan A. Second one is to calculate accumulated depreciation account also as at 31st of December 2018. So before we do that, let's look at the plan here, timeline. So you can draw this to make your understanding better. Put the date that it was completed, put the expected useful life and the bases that were adopted, as well as the revaluation model being exercised for the company. And take note that the revaluation took place after 15 years of you having the plan being completed, right? So it was at the beginning of the year. This is important because it was done not at the end of the year, beginning of the year. So by 15 years, the remaining useful life will just be 35 years. So starting from here onwards, your depreciation will have to reflect the fair value that were given, which is 23.905. So you will no longer depreciate based on the costs. You will depreciate based on the fair value. If you were asked to calculate that, remember you are asked to calculate the accumulated depreciation on this date. So you need to know that that is the new depreciation, which is also the accumulated depreciation in year 2018. Okay, that was in the current year. So plant account, as I said to you earlier, you are asked to calculate the plant balance as at 31st of December, this date, and therefore it is still at 23,905, right? Why? Because if you have your plan, right, on 1st of January 18, it will still be having the figure 22 million. But since you revalue the asset, there was a revaluation, right? Fair value versus, here is the cost, but the cost here will now be the carrying amount. So therefore you revalue that revaluation, yeah, will be the carrying amount here is going to be cost minus accumulated depreciation, right? So therefore you need to go and find that information to find the surplus if you are asked to do so. But in this question you don't have to do that. You don't have to, and therefore we can just erase this part. You're not asked to do that. What you are asked to do, right, you are asked to calculate the accumulated depreciation. So this is for 1 year, only for 1 year, right? For 1 year. Okay, so 1 year means you need to calculate just starting from 1st of January 18 up till 31st of December 18. So this will be based on revalued amount, and this is the remaining useful life. Remaining useful life is when you take the 50 years minus 15 years. So the years that remain is 35 years. So if you calculate, you'll get 683, because this is for 1 year divided by 35 times 1 year. And I also provide some bonus answer for you here in case you are interested. You can check my answer, which is for accumulated depreciation. I provide what is the amount beginning of the year, what are the carrying amount as at beginning of the year on the date you revalue the asset, and lastly the revaluation surplus that you are supposed to get, which is 8.405. Check that out yourself. I'm not going to discuss that. But the accumulated depreciation, just to highlight a little bit, that has to be eliminated against the PPE account when you exercise your revaluation here. So it has to be eliminated. How much? The amount that were depreciated the last 15 years. So that one is in case you are more interested to know about the elimination of the accumulated depreciation balance prior to the revaluation. Next one is question 1, June 2019, about Suzuki, that decided to expand the business and constructed an admin building in Seremban. 1st January 2010, this is the initial cost of the building was 800,000. So this is the initial cost. Somewhere in the middle of 2018, that was quite some time, right? Okay, middle 2018, around 8.5 years, middle, right? There was a huge flood. This huge flood had significant adverse impact on the admin building, where this caused major parts of the building to be damaged. So this one somehow is some indicator of impairment. Because of that, Suzuka conducted an impairment test on 1st of July. So there is an impairment test, and remember, impairment test will lead to an impairment loss only when the carrying amount is greater than the recoverable amount. So in your case, your recoverable amount is given here, where you are given fair value less cost to sell and the value in use, and you need to pick up whichever is higher, whichever is higher. So fair value less cost to sell is 500,000, value in use is 485. Suzuki adopted revaluation model, and they depreciate the admin building on over 50 years on a monthly basis. They close account every 31st December. So let's see the timeline diagram that I prepared for you. So these are the date of acquisition. 0.8 million is the amount that you spend, and the years estimated useful life was 50 years, monthly basis. After 8.5 years, 8.5 years, you have done the impairment. So there are some impairment testing, right? So you are informed that you adopt a revaluation model. So the impairment testing shows that this is the recoverable amount, and you need to find out what are the carrying amount on this date, because you want to see whether there is an impairment loss or not, and what is the accounting treatment. And since you use revaluation model, the accounting treatment for the impairment loss will have to be in accordance with MFRS116, right? You need to first make use of any revaluation surplus balance, but in our case, no information regarding the revaluation exercise. So we will have to see what is the accounting treatment. And this is the start of the year, the beginning of the year, and this one is at the end of the year. So your period of concern is this period, right? And take note that the revaluation took place in the middle of the year here. So when it took place in the middle of the year, from 1st of January 2018 until 30th of June 2018, the asset before the impairment, it has been depreciated. Why? Because you use monthly basis. So that has to be reflected as well in your understanding. So let's look at how to calculate the impairment loss by first doing some kind of workings. Number one, you need to find this actually, which is the carrying amount, because earlier this one has been given, you have finalized that to be the recoverable amount. So if this is number one, this one will have to find number two, because you need to compare this with recoverable amount, and that has to be at the correct date, 1st of July 2018. To get the carrying amount on 1st of July 2018, you need to take the cost, which is on the date of acquisition, and that has to be adjusted with the accumulated depreciation from the date of acquisition until the date that you have the impairment test, and that was this period. So that was for 8.5 years, divided by 50 times 8.5, so 0.136, and this is the one that you need to actually go and eliminate. Debit accumulated depreciation, I put AD, credit the building. That must be done first, right, before you start doing your exercise of impairment. 136. In the same years, as I said, there was already some depreciation that took place from 1st of January 18 up till 1st of July 18. So that was for 6 months. So you also need to reflect that in your calculation should you are asked to prepare your SOPL, which is to show the current depreciation and not only just showing the impairment loss. So impairment loss as well as current depreciation. So these two things must be reflected if you are asked to prepare an extract of SOPL. But in your case, that was just a bonus explanation from me, right? In your case, you have got the carrying amount to be 0.664. This one, yeah, the 0.664. You will compare with this, and therefore 0.664 million, which is 664,000, is as a result of 0.8 million, the cost minus the accumulated depreciation before the impairment test took place. So if you were to discuss, the discussion must be in sentence form, showing the first sentence or the first point is about what were the indicator of impairment loss on 1st of July. That was the fact that the building were badly damaged due to the impact of the huge flood. And talk about the impairment tests that were conducted. So when you conduct the impairment test, you do what? You compare the carrying amount. Show the working for the carrying amount in detail, which is to show how do you arrive at 664. You can also do it separately in the workings. And show the workings and also what is recoverable amount, because earlier you said you will compare. Here the keyword compare. Recoverable amount and the carrying amount. Recoverable amount 500,000, so it is lower than the carrying amount. Why it is 500,000? Because you take the higher between this and this. So which one is higher? This one, right? So that has to be reflected. And then mention about whether there is an impairment loss. There is an impairment loss only when these are more than the carrying amount is more than the recoverable amount. And talk about the accounting treatment. So it will be expensed off directly to the SOPL. Why? There is no previous asset revaluation reserve balance related to the admin building that were impaired. Okay, so you will just go and debit straight away to the SOPL like this. Debit impairment loss in SOPL with the amount 164. Credit accumulated impairment loss 164. Right, if you are asked to do the journal. Then you need to mention that the carrying amount that you will show where? Shown in your soft P for the admin building shall be reduced to the recoverable amount. So this will be reflected in the soft P. Next one is question part E. Yamahu acquired a land, a building and office equipment. So there are different types of asset here. Different types of asset, and those are having different subsequent measurement. So you have office equipment on the same date, a land also acquired, and a building. So these are the information for land use revaluation model. This one use revaluation model also for the building, and all of them has the same date of acquisition as well as the fair value. Only that for this one cost model, it will not make use of this fair value. Why? Under the cost model, if there is any fair value, you will just ignore. Okay, for land and building, it was just about revaluation. But for office equipment, you have this information that they sold. They sold means this is a derecognition. And that was sold 31st of December, which is at the end of year. And this 33,000 is actually the disposal proceed that you have to go and debit to the bank. Okay, you will draw the timeline, and this time the timeline is going to reflect the three assets. Yeah, so date of acquisition 1st of January 2016, and the initial cost for the land was 4.5 with the unlimited useful life. Say, and then building, you have all the information I plot here. Check that. And the information on the model used, revaluation model for the first two, cost model for the last one, and the information on fair value that was done at the beginning of the year. Yeah, and that was showing a fair value of 4.3. But remember, for this one, you will ignore. Why ignore? Cost model. You just ignore that. And then more information on 31st of December, where you that was in the current year that you decided to dispose the equipment at 0.033 million, which is 33,000. Okay. Now what I'm doing here, you are asked not to do this actually, but I'm just showing that you are asked to construct a schedule to show the movement of the land, building, office equipment for the year ended 31st of December. When you are asked to construct a schedule or the PPE note, you need to show two things. What are the information or the movement under cost or valuation? And number two, what are the information on the accumulated depreciation? And if there is any impairment, right? If there is any impairment, none in this question. If there is any impairment, also information on accumulated impairment loss before you arrive at the carrying amount. Okay. So let's look at the workings first to let you have a better idea of what I mentioned earlier. Okay, for the first two asset, building and land, what I would suggest you is first to do the adjusting journal entry before you just straight away go to the movement of preparing the notes, right? So for this one, before you revalue, you need to understand that the first asset was a land. The cost was 4.5, so the carrying amount also is 4.5. You will have to compare this with the fair value. If you compare these two, you can see that there is a reduction, and this is a deficit. So that deficit will be debited to the SOPL. So when you debit to the SOPL, that will affect SOPL. But when you credit to the land, this will affect your notes, right, on PPE. So when you credit the land, that is actually for you to go and take it out or minus. Okay. Then we go to the second one, building. For the building, what you need to know is you need to find, again, carrying amount, this carrying amount, yeah, but before you find that carrying amount, you need to know that that is done at the beginning of the year. So you need to find out the cost minus the accumulated depreciation. So the accumulated depreciation, I've done the working here for you, divided by 50 times 2 years, because that was after 2 years of acquisition that you have the revaluation took place. So 0.33 accumulated depreciation. This one must be eliminated. So when you eliminate, you debit accumulated depreciation. This is from the previous FAR that you learned earlier, and you credit office equipment. When you debit accumulated depreciation, this has to be also reduced. Where to? In your notes on PPE under the accumulated depreciation section. So when you credit office equipment, there was also reduction in asset, right? And this one means you need to go and adjust under notes to the PPE, which is under the cost and valuation section, right? After that only, so this is number one. Now number two, because of the asset that is depreciable. Now we go to number three. So if you compare the carrying amount with the fair value, you have a surplus. This one was a deficit. Surplus of 0.624. So you have to recognize that, and this is initial revaluation. So you will debit building. So when you debit building, you will credit ARR. Okay, that one is in equity. But when you debit building, you increase the building, right? So this one will be reflected by adding to your, where to your notes, yeah, adding to your notes, which is on your notes on the cost of the PPE. Which cost? The building. And in the same year, because revaluation took place 1st of January 2018, you also need to provide current year depreciation, which is from 1st of January 18 up till 31st of December 18. For that 1 year, your depreciation will have to be charged based on the revalued amount, which is 8.544. And because now it has been after 2 years, remaining useful life will be 48. 48 is 50 minus 2. Okay, that's it. And that is what happened, right, for that first part. Now we go on to the derecognition that happened to our equipment. For derecognition, please recall what you learned in FAR210. This is what you learned in FAR210, yeah, which is on derecognition. To do that, number one is for you to go and find out what is the carrying amount. To find the carrying amount, of course, you need to know what is the cost and what is the accumulated depreciation. So cost, accumulated depreciation, if you take that, you get 0.02, which is the carrying amount. That carrying amount on the date of disposal, right, will be compared with 0.033, which is the selling price, the disposal proceed. As a result, there is a gain on disposal. So this must be reflected. So for the journal entry, what you need to do is you also need to go and eliminate the accumulated depreciation when there is a derecognition. So journal entry that you have here, the one here, is the one that trying to remove the accumulated depreciation prior to the derecognition or eliminate. Then you need to record the proceed, so debit bank. So that was to record the amount received from derecognition because you receive in cash, and so you debit to the bank because that one is being banked in. And then credit office equipment. This one is what you credit to remove the costs that are being disposed. So that was number 3. And I put the journal here. This is the revision of FAR210. You remove the cost, dispose, or you eliminate, or you exclude, or you derecognize. And because you remove and you are selling at a price higher than the carrying amount, here if you compare these two, you have the profit or gain. That will be credited to the SOPL. And this is the gain on disposal. That one is related to derecognition. At the same time, right, since that happened, right, you also provide depreciation for the current year. So the depreciation for the current year was provided first. This one was provided first before there was a disposal. So beginning of the year, the amount was 0.02 given in the question. You can find it, the information. So you get 0.02, right? However, what you eliminate is this. However, the current depreciation must still be recorded before the disposal because this question used monthly basis. So you can check it out. And that will be reflected here, right? This is the balance of the land. This is a deficit. Deficit, remember, I told you, you need to go and deduct. And this is the revalued amount of the land, revalued. And then if you go to the accumulated depreciation for the land, there are no such thing. So therefore, the carrying value is 4.3 minus 0. Here 0, right? Nothing. So you get 4.3. Cost minus accumulated depreciation, no depreciation. Next is for the building. For the building, I've done that earlier. You eliminate the accumulated depreciation before the disposal. So when you eliminate, you go and take it out from the building, right? Eliminate, which is before revaluation, sorry. So this is where you debit your accumulated depreciation building and you credit the building. And the surplus is where you debit your building and you credit your surplus on revaluation. So when you debit, you need to debit the building. Here you credit the building, that's why you deduct. And the total balance here is reflecting the what you call revalued amount, which is the fair value given in the question, revalued amount. And then next, you have the building's information related to accumulated depreciation. This one is the balance at the beginning of the year. We have already calculated this much earlier. You can check my answer in the previous slide. And the charge for the year is 178. How do you get 178? If you have forgotten, let's just go to the slide for a while. Okay. Okay, this is how you get 178. Yeah, 8.544 divided by 48. And this is how you get 330,000, 8.25, which is the cost of the building divided by 50 times 2 years. But here is the revalued amount divided by the remaining useful life. So check out on that so that you will understand better. Okay. And this is the accumulated depreciation beginning of the year. This is the one that you charge during the year, and what you eliminate would be 330,000. By right, this should come first, right? This should come at the bottom so that you can see you eliminate the accumulated depreciation first, right? And then at the end of the year, you just have the new depreciation, which is 178. How do you get 8366? It is the revalued amount much earlier. Revalued amount 8544 million minus 178. So that gives you 8.366. Next is the office equipment. These are the balance at the beginning of the year. This is at the cost. And these are also the cost disposed. So at the end, there was no more balance. So no balance. Why? It was fully disposed. You can check the workings that I show you. Next is the accumulated depreciation. So beginning of the year, if you check the answer, you can get this 20. So that was at the beginning. You still charge depreciation. Remember, you charge depreciation, right, for the years before you dispose, right? So you charge the depreciation for that current year because you dispose at the end, at 31st of December. So your depreciation is for 1st of January till 31st of December. So therefore, you charge the depreciation at the end of the year when you dispose or derecognize. That depreciation must also be eliminated. So when you eliminate the depreciation, that leaves the balance of 0. Why? Because there is no more asset for you to depreciate for your office equipment. And the carrying amount is now 0. Why 0? Cost is 0. The balance as at 31st December. The cost is 0. If you can check here, no balance. And now the accumulated depreciation is also nil, or no balance. So with that, your office equipment has 0 balance. So make sure you do this correctly. Make sure you understand this correctly. That's it for today. Yeah, this is our last video. Thank you for watching. Sorry, this is a bit longer, but I think it's worth it for you to stay until the end. I'll see you when I will see you. Assalamualaikum warahmatullah. I'll see you in our next video for other questions. Assalamualaikum.